Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here, and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like these free videos and analysis we give to you on a daily basis, it's nothing in comparison to the membership you get once you sign up and join with the premium membership. As soon as you sign up and join with the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market. All right, so let's take a look at the charts here. We're going to start off with Netflix, and what we mentioned here early last week, is that we were likely going to head lower after earnings, and we got just that. So just to show you so you can learn exactly why we thought Netflix was going to head lower and why that happened here in the short term, is because we had earnings reaction right here. As you can see, this was the day after earnings, and you can see it was a reversal candle here. Tried to break these highs, but ended up closing here right at the lows, and we did so with heavy volume. And the previous day was a hanging man candlestick right here with heavy volume as well. So we've got a reversal signal right here, and that's why we headed lower. I still think we have to tag 190 to 189 before potentially bouncing. I think it hasn't yet seen the downside that it's going to see just yet. So still targeting down there. Again, trim and trail your stops on those shorts, and then we'll see kind of how it reacts to this level about 189.50 or so. And just to kind of go over exactly why this is the level that we're watching, it's because it was previous resistance right there and right there. So this is clearly a level of support that you want to hold on Netflix if you are bullish on this stock. The next one we're going to take a look at is NVDA. In NVDA, longer term, we're very bullish on this stock. But like we mentioned last week, because of the action that we're seeing up here, we think it's due for a little bit of a pullback, and I'm going to go over exactly why. So as you can see, we've got some sideways trading here. We've got a doji, hanging man, doji right there, and then we've got a gap down right here that ended up closing below these highs. So to me, this was the reversal signal or the confirmation that these sideways trading candles were actually distribution, because a lot of times you get candles like this, and on a strong stock like NVDA, it just busts through them. Okay, it just keeps busting through them and heading higher. So right now we got that confirmation because it did a gap down and then closed below those highs. So, and then again, as you can see right here, on Friday when the rest of the market rocketed up to all-time highs, we had NVDA that still got rejected. So again, I think that if Friday's market action didn't break this stock out, I think this is even more confirmation that this stock is going to head lower. And I'm talking about just in the very, very short term. Okay, so let's touch on some bounce levels. The level that I like for a bounce the most is right around 180 to 181, and I've got a couple of reasons. You can see there's some sideways trading right here. There's previous resistance there and right here for about a week straight. So as you can see, there's a lot of support right there. And if you draw a Fibonacci retracement from these lows to these highs, the 61.8 Fibonacci retracement level, you can see that number there, 61.8, matches up perfectly with that level. And we've also got some moving averages, the 50-day moving average, which by the time price gets down to here, the 50-day moving average could be right there, and we could get a bounce off of that 50-day moving average. You can see just in the recent history, we bounced off the 50-day, here, and the red line is the 50-day, if I didn't already mention that. You can see we bounced off of the 50-day moving average there, right here, right here. Okay, so clearly that 50-day moving average is important for this stock. And one last reason that I kind of forgot to mention why I think NVDA is going to head down, and again, I always like to point out, if you're shorting or getting long purely based off of an indicator and nothing else, you're going to have a bad time. But it is still good to use these indicators as just another reason to tack on to why you think what you think is going to happen on the trade. So just another reason that I think NVDA is going to come down is because we're at 95 on the RSI, just super high for a stock to be up here without seeing any kind of retracement. And again, we're not talking about any kind of a crash or anything like this. We're just talking about healthy consolidation back down to some support before potentially making some kind of a bounce. So yeah, that's it on NVDA. The next one we're going to take a look at is Apple. And Apple, right here, you can see we pointed out this bear flag right here, right there. We pointed that out on the last videos we've been doing on Apple, and right here, boom, we broke out of that that bear flag. Clearly, you can see that we reacted to that bear flag, and to me, this is just another sign that Apple is going to head lower from here. I think it can come up here, maybe fill the gap potentially, but to me, that's a great shorting opportunity. I think Apple is going to come down and at least test about 153. As you can see here, it was a big level here for Apple previously. I think it's going to at least tag down there. And this is just more confirmation to me. We've got this uptrend line that broke here. And in fact, we called for downside on this move right there. We nailed that. You can go back to the videos we did, back here on September 12th and September 13th. Watch those videos, and you'll see that we called for downside on Apple. Perfect execution on that. And here we called for downside on Apple again as we reached the top end of this bear flag, and we got that right there. And not only that, but it was heavy volume breaking out of that bear flag right there as well. So to me, Apple doesn't look the greatest. It's confirming the bear flag by breaking out of it, and we're back below the back below the 50-day moving average. So Apple's really got to prove itself. I think it's going to come down to at least 153. The next one is Tesla, and Tesla is another one here that we called for downside. We called for downside here because, as you can see, we had this trend line. Here's a bounce, there's a bounce, there's a bounce, there's a bounce, here's a bounce, and then we ended up breaking below that trend line right there, and that was not very healthy action. And then we came up. The other reason why we thought it was going to head lower is because we came over here and we clearly broke over this resistance. You can see it was resistance there, there, here, right there, right here, right here, and then we broke over it on this day. This was Wednesday, Wednesday of last week. We broke over that resistance clearly, okay? So we're thinking, okay, maybe it's bullish here. And we were calling for a rejection up here, and then boom, following day, we gapped down and closed below the previous day's low, closing back below this resistance, which then turned into support. So this ended up being a false breakout. False breakout. This is a great setup. You'll hear me talking about it time in and time again. When the level is clearly broken to the upside, and then it breaks back down under it, that is a false breakout. There are also false breakdowns as well. Both are equally as effective. It's one of my favorite. It is actually my favorite setup here. And again, I think that Tesla is going to head lower because of it. And again, we got confirmation. Again, we called for a downside on Thursday, and we got more confirmation of that on Friday as well. I think that Tesla is at the very least going to come down to this about 336 level right here. At the very, very least. So Definitely looking for downside on Tesla. And just to kind of put out a disclaimer here, earnings is coming up, and to me earnings is always a crapshoot, and I don't feel super confident in either direction on Tesla. So as far as earnings is concerned, I'm just going to step aside, and I'm not going to hold any positions through earnings and just let it kind of do its thing. But overall, I would slightly favor downside. But again, earnings, it could just surprise everyone and just gap up and close over these highs. You never know. So that's why we're stepping aside and not going to play it through earnings. The next one is Facebook. Facebook here, very strong. You can see here we broke over this resistance there. Here's the resistance, there's a resistance, and here we are breaking over that resistance right here. On Thursday, we came down, gapped down, and then ended up bouncing right off this support. Friday got an okay bounce, but we're just holding these levels, so it's still very bullish. And to me, with earnings coming up, I would favor to the upside on this stock because we're holding this support level. As long as we're above about 173.60 on a closing basis, to me, I would favor Facebook for an upside move. And if you look, just to kind of review, back here, here's another time that we ended up breaking over a very similar looking resistance right here, and you can see that move right there. And we broke out from about 155 all the way out to about 175. So next one we're going to take a look at is Google. And Google is one that was looking very bullish here. We broke over this resistance. Here's that resistance. And here we are breaking over that resistance. But right here, we're kind of just puttering around right here. We broke under that resistance on Thursday. And then Friday, we kind of closed like right at that resistance. Pretty much right on the dot. We're a few cents away from this resistance. We're literally a few cents above it. And to me, this is kind of a weak action. It's not a full-blown false breakout, so I'm not going to call it that. But it is, to me, having me kind of stay a little bit neutral. I'm neutral on Google just because of how close we are to this support and resistance. We're kind of just puttering around from side to side against this level. If we break Thursday's lows, to me, it's going to turn into a short. So if we break Thursday's lows, which was 997.30, then it's going to turn into a short. If we end up closing back above this support right here, close over Friday's highs of 1,008.65 cents, then it's going to turn back to bullish. So we can kind of play with Friday's highs and Thursday's lows for which kind of direction to go from here. But as it stands at this very moment, I'm neutral on this stock. The next one we're going to take a look at is Amazon. Amazon, this is one that we had been calling for some downside on Amazon. We've been mentioning here for quite some time that we still had to deal with this resistance level here that was created by this big gap down on earnings. So this is the last earnings reaction right here. You can see the day before the earnings, big red candle with some big volume down here. Following day was the reaction to earnings, big volume gap down. Following day, big red day with some big volume. As you can see, look at all the volume right here. Didn't see any big green volume days right here, and we still remained below this resistance point right there. So we remained below that resistance point, and as you can see, we came up and we got rejected. So to me, Amazon is not looking great for the upside move. I think it's still going to come down from here. Even if it heads back up to 1020, that's still going to be below this resistance level that we're seeing, and we got a big rejection candle here on this day on Wednesday. So to me, that is a clear sign that we're not doing so great on this stock, and I'm just talking about in the very, very short term for Amazon, because obviously if you look at the long run on Amazon, we're still very, very bullish here. If you look at from just the beginning of 2016, we've gone virtually straight up. So just kind of keep it in context. I'm just talking about the very short term here on Amazon, and that's what you got to be focusing on here if you're a trader. So thank you for stopping by and watching the video, everyone. Again, if you're not already a member at thetradinganalyst.com, visit us on the homepage, get to know us better, and then sign up and join the premium membership. If you like these videos that we give to you on a daily basis, it's nothing in comparison to the membership you get once you sign up and join. As soon as you sign up and join, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market.